Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1029th installment of Short-Term Trading Live with Oscar Carboni, and that would be me. Traders, this video is being filmed on Sunday night for trading Monday, June 3rd, 2013. Here we are, middle of the year in June. Traders, what do we have on the board? You've seen this before, right? Let's just start off with one thing. Futures trading is extremely risky. It can cause substantial financial loss. Futures trading is not suitable for all trading accounts. Always place stops first. Where are we? Let's move forward. Traders, I wanted to get in front of the camera and do a video for you tonight where I speak to you, but I thought on Thursday night for Trading Friday, I did one of these types of videos like we're looking at now, and I thought, let's stay with this theme, and I'll show you why. I showed you that we have a pattern lately. The last time the market came off, it was back in November of last year. It came off for 6 days. On the 7th day, it rallied. Then the next pullback, which happened in January, well, I should say in December of 2012, you had a pullback which lasted 5 days. And on the 6th day, it rallied out. So you had a 6-day pullback and then a 5-day pullback. Then, as we got into February, March this year, 2013, we had a 4-day pullback. 1, 2, 3, 4, and on the 5th day it rallied. So we look and we go 6, 5, 4, all right, maybe the average right now is 5. Then we had a pullback in April, and we had a 5-day pullback, and on the 6th day it rallied. So I said, now this is interesting, a 5-day pullback, a 4-day pullback, a 5-day pullback, a 6-day pullback. Let's keep looking. Then we move forward to where we are today, and this is I'm showing you what we did Thursday night for Trading Friday. And we had a 5-day pullback, and I said, that's it. This is day 6. We should rally now. And on day 6, traders, look at what happened. We did rally. We went up, 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 and settled higher. So it looked like what happened here after day 5, and we rallied out. What happened here after day 4? What happened here after day 5? What happened here after day 6? It looked like, wow, we're going to rally right out. But then Friday came. Well, bam, they smashed us down. So I said, okay, before we call a market that starts at the bottom of your screen down here and rallies all the way up to here, before we call that a bear market, which would kind of be crazy of us, let's see what else there is to look at before we condemn this market. So I looked at the analysis on a slightly grander scale. The slightly grander scale made me say, okay, we had 6-day and 5-day and 4-day and 5-day and 5-day pullbacks. That gives us an average of 5-day pullbacks. Take away the 4, take away the 6, you get an average of 5-day pullbacks. Get rid of the low and the high. So I looked at that and said, now let's do the analysis. Let's get a little larger. Let's zoom out a little, being that day 7 went down and not up. And I counted how long the event actually took place. So we had about 5 days of pullback on average before the rally started, but the entire event, meaning from day 1 when it started to act differently, from when it was going up, 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 started to act differently, came down, and then came back out of the hole. How many days did this take? And this took 12 days from this high out of the hole. The next pullback, we knew we had 5 pullback days, but it took 6 days in total. 5 pullback days, and it blew out of the hole, and it was gone on day 6. The next pullback that we had in February, average, well, not average, the next pullback we had in February, we had 10 days from the day it started to pull back to when we got past that high. 10 days. So, 12 days, 6 days, 10 days, we're going to end up with an average. The last pullback that we seen in April, we had a total of 8 days from when it started to pull back on this day until it got out of the hole. 8 days. Traders, right now we have 7 days in this formation, in this recent pullback, and they all look basically the same, these pullbacks. So, we have 7 days now of the entire event. Remember, now we're looking at the entire event. We've broadened our scope on the analysis, and we're not looking at just the 5-day turnaround. Now let's see what happened to the entire event. The entire event, on average, lasted about 8.6 days, or 8.5 days. We are now 7 days into it. Look, 1, 2, 3, 4, 5, 6, 7. Guess what tomorrow makes? The 8th day. So, yes, we're going short because OMNI's going short, and technical reasons as well. Look at this. We now broke this, which has to be looked at as a broken flag. We broke below the flag. We are going short. This whole chart I wanted to show you because I do not want you to forget or lose focus of the larger picture. The larger picture is we are in a big, booming bull market. So let's not get crazy. But we are going to do something. What we are going to do is we are going to go short because Omni wants to be short. And here's why. Traders, the emini S&P, what we'll have to do now is consider this whole thing that we looked at and said, hey, it rallied up, up, up. Maybe it's a head and shoulders, right? You got this little head, this little shoulder. But we don't think so. We think it'll just be a continuation pattern and get out of the hole. But you would have this little baby head and shoulders here if you wanted to qualify it. Well, now we've got to look at this in a different light. We've got to look at this chart and say, whoa, since Thursday and Friday, there have been some new developments. You probably now have to call this a bear flag. What other choice do we have? Giving us a target, bears, of 1595 to 1590 if we just pay attention to simple trend line analysis. Just bounce off all the lows that we could bounce off of. And that gives you a target here, simple target of 1595 to 1590. So if we do pull back, it's not carnal damage, but we may pull back here. Let's look at another chart. Traders, you look at the Dow Jones Transportation Average. This is the leader of U.S. indices. When you look at the Dow Jones Transportation Average, what I don't like about it is you have a bull flag leads into an F flag and then a bear flag. And I don't like what I'm seeing here because in reality, what that really looks like is a shoulder, a head, and a shoulder. We're starting to see these all over the place now. That's a shoulder, that's a head, and that's a shoulder. So really it's a head and shoulders, although we're looking at it as three separate flags. The bull flag, the F flag, the bear flag. And the bear flag is a bit of an F flag, to be honest with you, upside down. So you got to be a little bit careful here, a little bit careful. But then when we do the long-term trend line analysis, it's not terrible, traders. It's not terrible what's going on right now. We may have a pullback. So be it. We don't have to go short. We already have a short recommendation out for Omni for tonight if it rallies high enough. So I get it. We'll trade the short side if we have to. But this is becoming troublesome, and hopefully we'll stay inside of this big purple parallel channel. Let's look at NASDAQ. Traders, the NASDAQ is giving us extreme volatility lately. And when it does go into the extreme volatility, it is a pullback, right? Because you see normal size days, and all of a sudden extreme volatility, which leads into a pullback, it finally ends and you go up. Normal size days, a little bit big here, normal size days. Look at the extreme volatility here. Finally, you put your low in and you rally up. Well, look at what's happened to our markets in the last 10 days. The extreme volatility here, extreme. Look at the size of these days compared to a lot of these other ones before it. Look at, boom, boom, boom. They're way, way bigger. Extreme volatility. Traders, I've been doing this now for 31 years. Analysis till my fingers hurt, night after night. Trading for a living for almost my entire career, as long as I can remember since I'm 18. Somehow living off these markets. And I got to tell you, when you see massive volatility like this, after a big rally, it usually ends ugly. My personal experience is that it usually ends ugly after seeing such extreme volatility. But you must remember that first chart that we looked at. Before you get carried away, remember the first chart that we looked at. You got to give it 8.5 days on average to see if we're just going to finish our pullback and move higher. Do not condemn such a pretty looking bull market. But at the same time, we're not blind. We know how to stay focused. And we recognize that this is probably another bear flag. And if that's the case, this is probably going to come off. So if we're creating bear flags up here at the top with these extreme bars of volatility, that's not bullish. Not yet. You know what I mean? That's going to come off a little bit. Omni certainly has its arrow pointing down. Traders, let's just stay focused. Let's look at this The S&P, it's as clear as day that right now needs to be considered a bear flag and that we may find support somewhere near 1595. Traders, thank you so much for coming to today's video, coming to today's class. Thank you for tuning into my videos. We really, really, really appreciate that you watch these videos, and I hope that these videos help to keep you in tune with where markets are going next. Please come on down to livewithoscar.com. Jump into my free trading rooms and allow me to help teach you how to read these charts in the fashion I show you in these nightly videos. Traders, always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, thank you so much. Do not fall in love with the downside, but certainly looks like we're going to go visit it on Monday. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.